Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Paris Rapeseed. Now, the market's high in January, whilst making new higher highs, had some issues. The closes were the ones to watch, and they all closed as they had in late November last year, below the March 23 high of 540 3/4. All this action turned out to be a triple top, with the January high itself being a horn top. 6 weeks ago, prices were once again held up by the medium moving average, currently at 510 3/4, but with changeover we had a big gapping move lower, originally 490 even to 509 3/4. It is not the largest gap lower that I have seen here in this market, but it was useful enough such that prices opened after it below the long moving average, currently 494 3/4, and below two important supports: the significant February 2024 today uptrend, currently at 495 even, and the neckline extension, currently 486 1/4, of the April to August 2024 head and shoulders top, and just above the bright green neckline extension of the August to September 2024 reverse head and shoulders bottom, currently 479 even. After all this, prices started to recover upwards and tried to fill in the large gap overhead, which they very nearly did. But despite moving up over the gold long moving average, it's no longer gold, just a long moving average, dropping down last week through the primary and secondary targets for this pattern and finishing down below the bright green neckline extension. Now, for the earlier triple top idea, I said 2 weeks ago that, and I quote, "This pattern, though not a very pretty one, does give us some potential targets below, with a primary target down at 480 even, and a secondary harder to reach target X1 down at 458 even." Now, the move lower 3 weeks ago down to 481 3/4 just about reached the primary target zone down at 480, enough for me to consider it reached, end of quote. The only things I can add to this today is that we properly reached the 480 target last week, and we have continued the move lower this week, down towards target X1 at 458, which is still live, though it does look very lonely out there on its own. Winnipeg Canola. The market had since November last year, for the most part, formed a 3 steps up, 2 steps down action, gradually moving higher. The overall action higher left us with a few significant features on this market. The first was the mid-September to late November 2024 dark blue bullish shift pitchfork. Prices had for a while become closely associated with the middle time, but with gapped with a change lower, such that I have tempered this pattern after it exited below the lower time in preparation for me to retire it by next time. The second feature to note, and it is an important one, is the bright green December 2024 to early March 25 ascending wedge pattern. 2 Fridays ago, the market closed below the lower trend line for the first time, last week moving well below it, and this week accelerating the fall further. Prices have fully, and I mean fully, exploited the move lower. I said 2 weeks ago, and I quote, "It is too early to give potential targets below or downside, or even just potentials for a break higher or lower out of this pattern, but I'm keeping a close eye on it." End of quote. By last week, I already passed the primary target at 626 even, and as I said last week, and I quote, leaving a secondary harder to reach target X down at 578 and a tertiary target X1 and even harder to reach target down at 564 1/2, end of quote. This week so far, the market has reached target X at 578, and I've retired it, and we're not too far away from the tertiary target X1 at 564 1/2. Finally, and this is something I've already expressed doubts about, is the bow tie crossover, the imperfect bow tie crossover of the short medium moving average, currently 641.10, the medium moving average currently 634.30, and the long moving average currently 628 1/2. The moving averages went in and came out in the right order with a bullish incentive, but the issue is that it was not a completely clean, altogether crossover. However, even with that being said, it is worth bearing in mind that such a pattern would have, in about 15 to 20 sessions after crossover, one or more of the following, and I have said this before: a new trend developing, an old trend being reinforced, and or volatility. The time period for this is between the 11th and the 18th of March. Thus, we are right in the thick of it, and at the least you can say we have seen volatility this week. Bursa Malaysia crude palm oil. I said here 22 weeks ago, and I quote, "Of all the oilseeds and veg oils, palm oil has become the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there are 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April." End of quote. Okay, so things have developed since then, but a good place to start looking is at those patterns highlighted so many weeks ago. The first of these patterns is the bright red neckline, currently at 44.43 of the September to November 2023 reverse head and shoulders pattern, which I've highlighted repeatedly and which even last week supported the market. Additionally, and this one I also added a few weeks ago and many times previously, is the dark blue neckline, currently 44.70 of the September 2015 to November 2017 head and shoulders top. I've not been sure about this one in the past, but as it is an old one, a super old one, that had been way below the current market, but has as recently as last week become significant, so I would still bear it in mind. The third pattern here is the slowly rising long moving average, currently at 43.48. That stopped the market's fall dead in mid-January and has truly acted as a base for the recent rises in prices, very recent rises in prices. Now, there are other newer and closer to the market features to watch out for, and to start with, I'd look to how the market has waded up through a wide congestion zone between 44.08 to 45.59 below the market. Within this congestion zone, we have the old March 2008 previous all-time high at 44.84, as well as the April 2024 high at 45.27 and the June 2022 low at 45.59. This congestion zone helped hold up prices last week. Next, 4 weeks ago, I outlined the mid-August 24 to January 25 bullish Andrews pitchfork, today highlighted in bright green on my daily chart. It is still very much a nascent pattern, being only 8 weeks old, but I thought it might be worth considering, despite last week seeing a breach below the lower time, which is currently at 46.36, followed by a pullback up. The market is seemingly still trying to effect repair to the breach, as prices slid along it this week. I will still keep this pattern on my daily chart, but I am very prepared to finesse or morph this pattern in a heartbeat to a shallower bullish shift pitchfork for the same move, or even retire it completely. Next, a new pattern has possibly emerged over the last few weeks, and this is very much dependent on 2 things. Firstly, this is something I see on my daily continuous charts. So if you disagree with daily continuous charts, well, you won't like this or what I have to say about it. And secondly, the last 3 weeks' actions have helped draw this possible pattern, and it would not have existed without those actions, though in truth, I think this pattern is either morphing into yet another pattern or developing into a wider but still same pattern. It is a 2025 based possible reverse head and shoulders with a possible purple highlighted neckline, currently at 49.15. This is where it becomes a little trickier, as I have a question over where the second shoulder for such a pattern should be. Is it a narrow mid-February based action, or is it a wider late February to date pattern action that is still forming? Finally, I've also drawn a mid-January to early March nascent bullish Andrews pitchfork highlighted in pink on my daily chart. Prices are right now in between the overhead middle time, currently at 47.80, and the lower time below, currently at 45.28. I am prepared to finesse this into a shallower bullish shift pitchfork, or to retire it completely if it is no longer functional.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.